welcome to Market Observe. My name is Andrew. This is the first weekly update on the key areas of the market from a technical analysis and macro point of view. So you will receive these weekly. We will run through the stocks, crypto, commodities, currencies and bonds, which are all key areas of the market. We will also review the economic calendar just to see if there are any market moving events coming up. Alright, so let's run through the stock market here. We are going to start off obviously with the most important stock index, the S&P 500. Now, we've had multiple touches in this long-term upward trending parallel channel. We have been quite bullish as well. We've stayed majority of the time in the top half of this parallel channel. We are nearing the top end of this current parallel channel. And potentially today we get a move towards the top end of this parallel channel and then a correction into next week. So we could move up here today and then consolidate around here until we receive better or more significant economic data, which is more likely to happen in the first week of October and second week of October. And that is due to the fact that we will have the inflation and jobs numbers coming out in those first 2 weeks. So we could consolidate here or slightly higher towards the top end, or we could have a small breakout. So we could break out here and then sort of pretend like we're going to break out and then come back in later on. Similar to what happened here. So we could have a move up, a little bit of consolidation and then a move down. That could provide an opportunity for a trade, and hopefully it does that, because I like to make money as much as the next man. So we have options of consolidation or a false breakout and then a move lower into next week. And then a deciding factor will be those economic events in the first week of October. Currently, you would have to be bullish on the stock market, even though we are overextended in terms of valuations, and momentum is clearly on the downside here, as you can see on the RSI. But we are in a significant uptrend, so you do have to respect the uptrend. And you can see that the Nasdaq is much the same. It has a small breakout here, and maybe it reaches the top end of its parallel channel by the end of today, before potential consolidation next week, which is all down to the options expiration. We have options expiration coming today, and dealer repositioning will occur, which could cause some selling, as most of the call options are realized today. And that is pretty much it in terms of the stock market. The Russell is making a false breakout here on this parallel channel, and we have crypto. Well, crypto's done nothing. You know, and when we talk crypto, we talk Bitcoin, because Bitcoin is crypto. Without Bitcoin, there is no crypto. Okay, so we are in consolidation. Nothing is happening with Bitcoin. We've been in here for 6 months and we've done nothing. We've just gone up and down and up and down. So you could take some positions here or positions here. Again, you need to be mindful of the volatility within this asset, and so position sizing is important. Loss sizing is important. So I would use less capital on a Bitcoin trade compared to an S&P 500 trade because of the volatility. So please be mindful on the Bitcoin trade. You can do a similar setup like this and trade the ups and the downs. That is not a problem, and maybe you'll make some money, but it won't be, you know, like this, for example, where you get a nice clean big break after consolidation. Right? So we've had consolidation in this section, and then we get a nice clean move to the upside. Well, we are in a long-term consolidation here. We've had neither a break to the upside nor the downside, and so you are stuck in a tight range between sort of 55 to 68. So about 10,000 chop is where we are right now. And it's not very exciting to trade chop, unfortunately. It's quite boring and unreliable. especially if they do something like this, where they try and take you out of your trade. And if we go back in, we can have a look at bonds. Bonds are in a sort of slightly upward trending parallel channel. It's quite a short-term parallel channel, only for a month here. And we've had a recent correction here from the highs, and the main reason behind that is down to the 50 basis point rate cut by the Fed, and it has caused the 10-year to move to the upside due to potential inflation issues down the pike. You know, there's if they continue to cut in this fashion, then there will be a resurgence in inflation, which will make them pause, and then when they pause, the treasury yields will go higher, and there's a lot of moving parts. So currently there isn't a massive trade going on TLT. It's quite boring. The Dixie is more interesting in terms of value for money. You might get a move back towards the 105 level, and that could all be down to the inflation information that we start to get in the coming months for October, November and December. If we get a re-acceleration in CPI, then the Dixie will strengthen, yields will strengthen, gold will go down a bit, stocks will go down a bit, and yeah, you have a long trade here, where you could take a position here and stick your about there, and to the top end of the parallel channel is a risk reward of 2 to 1, so it's certainly viable, but could be stopped out. You know, it's not a guarantee, and you don't really want to go much lower than where I have it, because then the risk reward goes down, and then it's not really worth your time. So that's the potential trade setup for the Dixie, is a move to the upside. Gold also has potential for a trade. Again, we would want to see a pullback down towards this parallel channel, or down towards the anchored VWAP. So around this level, taking out the shorts here, retesting this level into next week. If we get a consolidation in the stock market, then that will help the opportunity, and you'll get a good risk to reward if we do get a pullback into this region. So there, and then so 2 to 1 is 2, 6, 7, 8. Again, why wouldn't it go there? You know, it's in a very powerful uptrend. It's made a breakout from its current consolidation. It makes perfect sense to enter a trade if it does come back to those levels. And silver would be the same. It's broken out of its channel, and we would be looking for a confirmation of a pullback next week and entering a position there. The risk to reward won't be as good, so you do need to be a bit mindful of that, and it is more volatile, so it could throw you around. Copper is staying below its current VWAP here, so topped out in May at around 5 quid. It's pulled back. Every time it hits this VWAP, it moves a bit lower, so I'll have to wait and see. Market structure in the short term is bullish, so it could come back down here, retest this area, and then go for another run. That is definitely a possibility. US oil is down at the bottom end of its consolidation region here, and again we could see a move down a little into next week and then a reacceleration, or we could see consolidation in this bottom half. Palladium, again nearing the breakout here. I was in a trade and got knocked out of it, which is annoying, but it is moving to the upside, and I would like to see a little pullback next week and potentially entering a long position in palladium. Cocoa had quite the run for 24, but has stalled and could enter a short position here. Again, it's not a crisp setup, so I'm not overly interested, but you could enter a short position here. And, you know, this could be your stop. And this could be your target. So again, that could be an option where you take a short-term trade and hope that it corrects down lower into next week. But again, these are more long-term positions, and I would prefer to take them in this area. Okay, I think that's pretty much it. We've covered commodities, we did a little dollar, we did some bonds, we did some stocks, and we did a bit of Bitcoin. So I hope that you enjoyed the review of the market for this week. We will be doing another weekly update at the end of next week. Hopefully we have some answers as to the market direction. Currently, nothing exciting happening. I had some trades in here that went well. It could have gone better, but they went well. And yeah, I'm just waiting for the next interesting setup. And currently I don't have one for the stock market. I have some for gold and silver, should they come back and test things next week. And potentially the Dixie. Again, that would be probably a little higher risk than the gold and silver because it's consolidation. And we are in the cutting cycle, so weakness could appear in the Dixie. But other than that, I don't see any reason to be in the cocoa area. They could easily move it if they want. I would prefer to enter either up here or down here. And yeah, that is my 2 cents on the market for this week. I hope you guys have a lovely weekend, and I will see you again on the next one.